Welcome to Markets Now. I'm Michelle Rook along with Randy Martinson with Martinson Ag. We are seeing mixed trade in the grains this morning. Corn and wheat lower, soybeans higher. Cattle have been mixed with hogs seeing a little pullback. And Randy, let's start off talking about the corn market. Of course, we had a reversal on Friday after the WASDE report, and it looks like that market is continuing to be pushed by technical selling, but also the wheat market isn't helping, is it?
It's not, and just even the news itself for corn isn't as friendly as we'd like it to be. You look at the report, and even though the numbers, the stocks were lowered a little bit, which should have been somewhat friendly, the fact that we're still over 2 billion is a little daunting in this market. And when you look at where the acres came out at, what the difference between FSA and USDA, they're pretty close to each other, and that signals that USDA might be coming in the next report and increasing the planted acres, harvested acres numbers for corn.
And there's also talk already about the fact that yield might be going up from here, not getting smaller.
Well, exactly. I mean, we're looking at good conditions right now going forward as, we're looking at cooler temperatures as this crop finishes up with its pollinating stage, and we're looking at rain moving across a lot of the northern plains over the weekend. The Corn Belt picked up some good rain. So, yeah, we're going into the end of the crop development in really good shape.
So let's talk about what we've done in terms of technical damage as well. We've held the 481, which is the July low, but is that just a matter of time before we take that out?
I think so. I mean, I wouldn't be surprised to see the market hold together as we go through the Pro Farmer Tour next week, mainly because that's going to be infield surveys, results. And I think the trade will wait to see what they find in those numbers. But then I would say then pretty much most of the news is going to be in the market, and then we could start to see this thing break down.
And as I mentioned, wheat is dragging corn down, double-digit losses in the wheat market. And of course, we did have bigger ending stocks on Friday, but what's really pressing the market here today?
I think that, again, is just the lack of demand. I mean, you look at our exports got lowered in the report, and, we had bigger production for the soft red and for the winter wheat. Spring wheat was a little bit lower, but again, we picked up rains, which should finish off the late season wheat crop up there, make it a little better production. So I think overall, it's just the market is being dragged down by the idea that production probably could increase and demand isn't very good.
No doubt. What about the soybean market? We are back up today. We closed lower on Friday after what was, a pretty constructive report for soybeans. But is the idea in this market that maybe the yield's going to get smaller, or is the market right now worried about weather or what?
I think they're a little bit worried about weather. I mean, you look at the 1 to 5 and we're looking at cool, wet conditions, but then we're looking at the 6 to 10, which is calling for above normal temps, below normal precip. That could impact things a little bit. But I think, again, in the bean side of things, we got good demand. We had another export overnight. So I think the market is still swaying with the fact that even though we lowered our stocks, we're somewhat comfortable, but it wouldn't take much to teeter soybeans over to a very tight stocks scenario. And I think that's holding this market right now for the meantime.
Yeah, we've had, pretty good conditions so far in August, but if that forecast does flip hotter and drier for the end of the month, that probably could snug things up here a little bit, right?
Exactly. I mean, that's, the bean crop's made in August, and right now, we're just in the middle of it. So we could see some adjustments coming forward yet. But once the 6 to 10 goes, the 11 to 15 is showing better weather again. So if we can get through that 6 to 10 without much damage, then it does look like we'll see possibly another increase in the yields for soybeans.
You mentioned the export business that was announced this morning to unknown destinations from the soybean side. Do you anticipate we're going to continue to see soybean sales? Or are we going to be able to get caught up? New crop export sales are behind.
We are still running behind. Yes, that is a fact. And I do think we will. I mean, the trouble that's going on, especially when you look at South America, they've got so much grain right now that they have to try to move, and they're trying to get corn in and get that moved through the system. They're going to run into some bottlenecks, and they are running into some bottlenecks. So anybody who wants just-in-time inventories of product, they have to come to the U.S. to get it because it's going a little slower getting product out of Brazil.
Cattle market, we've got live cattle. They've been two-sided already here this morning. Feeders under a little bit pressure as you and I speak here, but that market is kind of quietly consolidating here. We haven't had a lot of real big cash direction, have we?
We haven't. Packers have been very careful. I mean, they want to come in and buy product, but they're seeing red ink, so they're being somewhat methodical about what they're buying, bringing in as much formulated as they can. Stocks got, or the production got tighter, as we saw that reduced in the report on Friday. So I mean, the cattle have a lot of friendly news out there, but it's still, we have to worry about the consumption side and the consumer side. And right now, I think that's what the Packers are watching close.
Yeah, but the demand, I mean, choice boxes are above $300. Demand has been holding together much better seasonally than it does for this time of year normally, isn't it?
It is, and hopefully that'll hold on and continue as we go forward into the fall. Normally we start to see things drift a little bit, but hopefully we can hold on to that. But we do know that we're going to continue to see supplies tighten up as we move forward. And I think that will continue to keep some underlying support in this market.
Gotcha. Hogs mostly lower today. August goes off the board, leaving the back months at a pretty good discount. What happens after that?
Boy, that's a good question. We're at a steep discount, and I do think with cash can hold up. I do expect that the October will come up and meet the August somewhere in the middle from where it's going off the board at. But we've got a large gap between the two, and I don't think that cash is going to drop all the way down to where the October is trading at. So I do expect them to meet in the middle.
And one of the outside markets I wanted to touch on is crude oil, because we've had quite a run here. We're seeing a little softness today. Is that just, technically some profit taking, or is there some economic concerns with what's been going on in China, or what's going on?
I think it's a combination of the two. I do think, that they're a little worried about China and whether or not they're going to get fully back into, pre-COVID status timeframe, with their demand. But I also think, technically the market has pushed pretty good, and it needs a little bit of a pullback. I do know that, OPEC's cuts and the fact that Russia's cut a little bit on the production side has been somewhat supportive. But I do think that this market technically could stand a little bit of a retracement.
No, I don't disagree with that. China economic concerns, though, continue to kind of bubble under the surface here, don't they?
They do. You look at what's going on with their banks and trying to do some sort of a stimulus. You look at the concerns about on the real estate side. So there are some major concerns out there as far as China's concerned. But I do think that as we move forward, China will slowly, I hope, come out of that and continue to see demand increase.
Thanks for joining us. Randy Martinson with Martinson Ag, and that is Markets Now.